You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Hello, everyone, and welcome to the Currency Call presented by Forex Trading Asia. And hello to all our LCMS Trader Club members that are watching the live telecast as well. Hope everyone had a chance to watch the Monday night live trade call as well. A lot of good insights just with the economic calendar that was discussed with Gimme as well. Lots of trade ideas with Jin, and I did post most of the trade ideas. I tried my best to capture them all in the chat as well, so feel free to check those out. And a little bit going on as well today, but just before I get into it, a quick introduction as well. So to the people that are new and watching this on YouTube and you're wondering what LCMS Traders Club is, feel free to visit the Jindao Thai website in the bottom of the video that you are watching. And it is episode 440. And it is the 14th of December. Now, the currency call is presented every Monday to Friday at 11 a.m. GMT +8, and the currencies we analyze are as follows. Monday, we do the Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, we do the Pound, and then Yen and Gold for Thursday, and CAD and Crypto to finish the week off for Friday. And in the currency call, we discuss the market economic updates. We go through the key support and resistance levels of the currency pairs in focus for that particular day. We go through the trade ideas and we discuss much more. In particular, this week is definitely a currency call worth checking out, every day of the week, especially with everything that is going on with all the central banks and the interest rate decisions coming out too. So Gim Hong will be taking care of all of that for us. And the currency call is going to be very beneficial for both the long-term investors and the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll highlight the potential targets and risks as well. Finally, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So just to kick off today's episode, we have discussed this obviously last night as well, but if you didn't get a chance, we are going through the FOMC economic projections with Gim Hong here, currency strategist at LCMS Traders. We went through what the inflation did on Friday night last episode, but today it's quite a few things to discuss with Gimme. So take it away, Mr. Gimme.
Thank you, Scott. All right, finally, the last monetary policy meeting from the Federal Reserve for the year, and it will likely end off with a bang. Okay, end of the year with a bang. Okay, so what the committee members actually did during the previous meeting, okay, was that they held interest rate unchanged as expected, okay, in the targeted range of 0 to 0.25. And they actually started QE tapering at a rate of $15 billion per month for November and December, okay? And apart from that, another thing that we have been waited for months, all right, is the retirement, not of Powell, okay, but of the term transitory, okay, the term transitory when it comes to, communicating inflation with the general public, okay? Because as we all know that the Federal Reserve has been mentioning about, inflation is transitory, it's going to come back down soon enough. But then that's not what we see, okay, based on the data, right? We've been seeing new records being broken on a monthly basis. First to the 30-year high inflation in US, and then to a close to 40-year high level just being released last Friday, all right? So that was pretty much it for last meeting, okay, the previous meeting. So what can we expect from them this time around? All right. Interest rate is going to remain unchanged. Okay, if there's going to be a change in interest rate, trust me, it's going to be hectic. It's going to be chaos. There's going to be like chaos around the market. So expect no change in interest rates. Okay, but we can actually expect something in terms of QE tapering. Okay, specifically, we can expect the pace of QE tapering to increase. All right. So like I mentioned, At the moment, it's actually being carried out at $15 billion per month. All right. There are many out there who are actually speculating, expecting, forecasting, projecting that the central bank will double the pace of QE tapering, okay, to, well, from 15 to $30 billion per month, okay. And yeah, just carrying out some quick math, all right. For 3 months, 30 billion, okay, January, February, and March 2022, that will total up to $90 billion, okay. And then with the November's and December's 15 billion, okay, individually, all right, we add up to 120 billion, which is the total amount that the Fed, QE purchase, bond purchase on a monthly basis, okay. So what that means is that if the central bank were to actually increase the pace, were to double up the pace from 15 to $30 billion per month, then we will see the end of QE, okay, by the end of March 2022, all right? And then after which, you guys know what to expect, right? I mean, what comes next is pretty obvious already, right? We can actually start to expect interest rate hike and things like that, all right? So yeah, the first thing that we can expect from the Fed on Thursday, okay, Thursday morning at 0300 GMT plus 8, okay, is an increase in the pace of QE tapering, all right? Is it possible that they're going to hold it unchanged? Yes, unchanged is possible, all right? They may want to, although it's unlikely to be the case, personally, all right? Personally, that's my feel, is that they are unlikely going to hold unchanged at 15, okay? I mean, the last Friday's inflation data is a very strong hint to the central bank, okay, that look, you guys are going to do something. Otherwise, inflation is going to hit. It's going to really make new, have new records being broken on a monthly basis. All right. So, which is why this whole inflation pressure is actually acting on the Fed to, speed up the whole QE tapering process, and let's just get it done and over with, so we can increase rate to tame the already high inflation down to its 2% targets. All right. So, yeah, so that's the first thing. Also, is it possible for them to slow down QE tapering? Yes, it is possible, but highly unlikely. Come on, at this, we are already at a super high inflation period of time, right? Why would they actually slow down the whole QE tapering? Okay, so it's very, very, very unlikely, right? So 3 scenarios. Slow down QE tapering, which is highly, highly, highly unlikely, okay? Hold the pace of QE tapering unchanged at 15 billion per month, possible, okay, but also slightly unlikely, I would say, all right? And the third scenario, increase the pace of tapering, which is highly likely, all right? So that's the first thing to pay attention to. You guys can just open up the rate statement, all right, and just skim through to see if there's any. Usually it will take place in around the first or second paragraph of the statement. I'll show you guys later on, all right? Like, I'll head over to the website later on and show you guys, okay? Yeah, so QE pace, just pay attention to the rate statement, all right? Second thing to take note, all right? This is the December's meeting, okay? Which means the quarterly economic projection materials will be released by the central bank, all right? Don't really bother with the, well, you guys can take a look. I'll give a full coverage later on, okay, post FOMC meeting. But the main point to pay attention to in this economic data release, economic projection release, is the dot plot. Okay, specifically, we want to see if there's any shift in the dot. Okay, you know what? I'm just going to head straight to the page. Then it will be more. Everything will be very clear. All right. So I'll be sharing this page probably tomorrow, okay, together with the live stream link for the press conference that will take place at 0330, okay, just 30 minutes after the announcement, okay, from the Fed. So don't worry about the links, okay? You guys in the ECOFIN, just check the ECOFIN more often, and I'll be sharing the links there, okay? So this page that you're looking at right now is the central bank's page for, where you can get all the statement, the minutes, the projection materials, the press conference link, and things like that, all right? So what you want to do is actually to scroll down, okay? Make sure that you're at the 2021 FOMC meetings section, all right? And then you just scroll down look for December. Okay, right now it's empty. Okay, but on Thursday morning, you will start seeing, statement, PDF, HTML, implementation notes, and things like that. And then you'll be able to see the press conference once it ends. Okay, and then the minutes will be released probably next month or so. Okay, so when the statement is being released, okay, at 0300 GMT plus 8, my suggestion is I'm going to click on the November statement right now just to illustrate. All right, click on the HTML purpose for readability, benefits. Okay, so if you click on the HTML, and then you'll see something like that, right? Federal Reserve issues FOMC statement, and then the start off is just saying what's their goal and things like that, and then during the second paragraph, it's about vaccination and things like that. Okay, what you want to pay attention to is this part over here. The committee seeks to achieve maximum employment and inflation. Okay, once you see this line, which is likely going to remain unchanged, okay, because this is their whole dual mandate goal, you will want to look on, look further down for the quantitative easing tapering. So where is it? I think it's around here. Okay. The committee decided to begin reducing the monthly pace of its net assets purchased by 10 billion for treasury securities and 5 billion for agency mortgage-backed securities. Hence, a total of 15 billion. Okay, so the Federal Reserve QE, okay, actually has two parts to it. All right, it has two parts to it. First is the treasury securities, okay, and then the other part is the agency mortgage-backed securities, aka MBS. All right. So what we want to know is whether this 10 billion for treasury and this 5 billion for mortgage-backed securities will be increased. Okay, this reduction of monthly pace of its purchases, okay, will be increased. So in the case whereby they were to double up the speed, the pace, okay, of QE tapering, then it is possible that we will be seeing something like a $20 billion for treasury securities and 10 billion for agency mortgage-backed securities. Okay, so pay attention to this. So it's probably like a 1, 2, 3, 4, probably like a 4th paragraph. But don't memorize this. Okay, you can just do a quick Control F, to search for treasury securities. Yeah, just type the word treasury and it probably come up like TREA SUROY. The first result that comes up, it shows you the amount that they are tapering by. All right, so this is the one that we want to pay attention to. Okay, if it actually increase, this is actually very hawkish for the US dollar. Hence, we can expect the US dollar to strengthen. Okay, this is the first thing to pay attention to. Second thing, okay, so you have seen the statement. Okay, I'm going to show you guys the projection material for the previous quarter for September. All right, so for projection materials, my suggestion is to go to the PDF, because if you were to go to HTML version, all right, you will not be able to see the dot plot. Okay, it cannot be plotted on HTML for some reason. All right, so if you go to the PDF, okay, just scroll all the way, well, pretty much to the bottom of the page. Okay, pretty much to the bottom. Is it the bottom? Yeah. Okay, mid halfway through. All right, and you will see this page. It always states figure 2, okay, figure 2, FOMC participants assessments of appropriate monetary policy, midpoint of target range or target level for the federal funds rate, aka interest rate. All right, once you see this plot, this graph with tons of dots that you don't even know what's trying to say, then yeah, you're at the right place. All right, so what we want to pay attention to is whether, okay, let me just zoom in a bit more so you guys can see clearer. Want to pay attention to, okay, is whether they will be shifting the bottom dots, okay, for 2022, 2023, and 2024 higher up. All right, so you see on the right hand side, we can actually see like these numbers over here, right? So if let's say we are looking at this this lowest row over here, they're like 2, 4, 6, 8, 9. What this means is that for the year 2022, okay, for the year 2022, 9 committee members are actually expecting the US interest rates to be between 0 to 0.25%. Okay, and then if you move up the next level, then you will see like there are 6 members. Okay, 6 dots representing 6 members are expecting interest rates to be between 0.25 to 0.5%. Okay, and then 3 members are expecting interest rate to be between 0.5 to 0.75%. Okay, so previously there was, well, since the June's projection, okay, we have actually seen some of the members actually, project interest rate to be higher than the current 0 to 0.25 level. All right, hence it's a good thing. Then you will be seeing, dots being shifted upwards. So if more dots, okay, from these 9 dots over here, are being shifted upwards, okay, that is a very hawkish move, hawkish tone coming out from the Federal Reserve. Okay, that is what we want to see. And then in 2023, well, pretty unsurprisingly, okay, you see that majority of the dots are actually above the current rate of 0 to 0.25%. Okay, because majority of the members actually expect a strong, decent, pretty much almost full recovery by 2023. Okay, so this is actually a good thing. All right, so pay attention to these dots. Right now, you're seeing some some pyramid or triangle kind of shape, right? If more dots will be shifted up, you will see like an inverted triangle kind of thing. Okay, it's just some geometrical shapes that I usually look at when I look at this dot plot. All right, if you were to see like an inverted triangle kind of picture over here, then yeah, it's more or less going to be hawkish. All right, so these are the 2 things that you want to pay attention to. Okay, first, the rate statement. Check on whether or not they actually make a change to QE tapering pace. Second, head over to the projection materials, scroll to the, I think, the 4th or 5th page, okay, where we can see this figure 2 dot plot and see if there's any shift in the timeline, okay, the timeline of interest rate hike, okay, by the central bank members. All right, so with that, okay, should you guys be trading this news? Okay, I highly suggest you guys should trade this news, okay, because apart from having movements, there are also going to be consistent movement. All right, because like what I've shared with the club members yesterday during the call in the evening, this time around, okay, whatever changes the Fed may be carrying out, okay, it is going to be a clear-cut kind of a change. Okay, if they increase tapering from 15 to 30, it is 30. Okay, it is going to be likely for that for the next 1 or 2 months or so. Okay, and if they are going to shift their sentiment, okay, to expecting interest rate to be higher than what they actually are expecting at the moment, then it is going to stay like that for the next 3 months, because the economic projection materials will only be released and will only be revised by the members on a quarterly basis. Okay, so the next revision will be March 2022. So no ambiguity. All right, Powell has already retired the transitory term. All right, so no more ambiguity. All right, if inflation is high, the central bank is going to just explain clearly, it's high, it's really high, and we have to do something about it, right? So no more, excuses like being transitory, oil prices will be coming down and things like that. Okay, so yes, you guys definitely should be trading. And if there's 1 day in a year that you guys should stay up late, for those living in the GMT+8 time zone, then Wednesday night will probably be the night that you guys should stay up late for this potential profit news. Okay, so as usual, okay, keep your trade short term, preferably. Okay, personally, I prefer this time around to keep my trades within the 30 minutes before the press conference is being carried out. Okay, because if there's going to be any big movements, chances are it's going to be during the release of the announcement. Okay, because like I've said, the decision is going to be clear cut. There's not much explanation required. Okay, why do you guys increase the pace of tapering? Why do you guys, shift your dot plots higher up? It's pretty self-explanatory. Okay, we have like super high inflation. We have like, the Fed basically needs to increase their sense of urgency. All right, at this period of time. So not much explanation is being required when it comes to the actions that will be carried out on Thursday morning, okay? Unless Okay, unless the Fed decides to hold tapering pace unchanged at 15, okay, then the journalists, the reporters, chances are they will grill Powell, like, with this whole new record-breaking inflation, near 40-year high inflation level. Why is it that you guys are not doing more? Okay, when the markets, the general public are actually expecting you guys to taper at a faster rate. That is when you pay attention to the press conference. Okay, because because we are all expecting something to happen, right? But then they did not carry it out. So that is where we want some answers. Now, if they were to increase tapering and shift the dot plot higher, then yeah, keep your trade short term, trade within the 30 minutes before the press conference. Else, stay tuned for the press conference. There will be more trading opportunities. Okay, when he talks, prices will move because he has to give answers to the public regarding their actions and things like that. All right. So a question from Sunil. So are we all trading together on the platform or live trading? Oh my goodness, live trading, you got to ask Jean. All right, trading together. Seriously, I got to work on Thursday morning, but I'll see how it goes. All right, maybe I may consider staying up late just to
I'll be up, but I'm
you'll
sure
be up. Okay,
be
so I can get my beauty sleep so that I will, so that I can provide you guys more information on Thursday morning. All right.
I'll give the update. I'll give the update in the chat, but I'm pretty sure that we won't be doing a live session.
Okay, so no live session, no live trading session, but Jean will be up to guide you guys, all right? To remind you guys to keep your trade short term, take your profits and run and just enjoy the weekend and things like that. All right. So that's all I have to share. So it's on Thursday, 0300 GMT plus 8. Press conference will be at 0330 GMT plus 8. I will be sharing the link to the statements, the whatever, and the live stream link, okay, tomorrow when it's closer to the meeting. All right. And then I will give you guys a full breakdown of what went down, all right, on Thursday morning during the live currency call. Okay. So with that, I will hand it back to Scotty.
All right, thanks for that, Im, as well. And so just to get into it, there's obviously not much to add to the FOMC projections, but what I will just touch upon is just how the US dollar is performing right now. And it's been interesting. This is the 4-hour time frame with the Samtrade platform. And as you can see, we are seeing a little bit of a lift on the US dollar as well. And I would actually volunteer for the live trading, but I think my wife would legitimately kill me. So it is 3 a.m. in Perth for me as well. So I think that would be very bad for my well-being and health, unfortunately. But if you do want to get sort of involved in these big events, probably the easiest way, honestly, is to just allocate some funds to Forex Briefcase. I personally do have, a sizable portion. Really, obviously, it just makes sense. Now, you could say stocks and everything like that, but we're seeing a lot of jitters in the stock market. If you do watch the equity chat, I actively trade the ASX markets as well, and it's tiresome. The markets haven't really moved today at all. There's no one participating. Just means you're very vulnerable if you're holding these cheap stocks to get rug pulled, low liquidity. Be very careful as well. So what I'm seeing here now is that US dollar is already looking to move high. Now, I just want to touch upon the news as well for later today. There is a little bit going on to discuss. Obviously, the main event was the Thursday morning. So we do have, obviously there wasn't really a lot last night that we had. And we do have the core PPI coming out. We do have the PPI coming out as well. Pretty much exactly how it was last month. A small increase is expected for the core PPI, both coming out at 9:30 to 9. And then even Wednesday night. So, we do that live call 8 to 9 o'clock GMT plus 8. We've got a little bit going on, and we've seen the US dollar usually is moving with an anticipation of, bullish figures. And then when the numbers come out, they've been a bit mixed. And it's hard to actually trade. So that's something to think about. So the 8 o'clock to 9 o'clock call on Wednesday night is going to be something really to think about, to get onto. But frankly, for today, it's, you know, this is probably not going to be a real bullish announcement, but it's still going to help keep that US dollar elevated over 96. So my thought process is definitely, you know, small pullbacks are being bought into. And I would also, I'll discuss more about, I shared some commodity futures information as well in the USD chat, and I'll elaborate on that as well. But we do now have, it is Tuesday, guys, so we have the Euro in focus with Jin here as well. I'll stop sharing. And we do have a little bit going on for the Euro. So we've got some news and the chart looks not too bad, but I'll pass it over to you now, Jin.
All right, thanks for that, Scotty. So, you know, I'm actually super tempted to do the pound dollar instead of the euro dollar today, but I will stick to the plan. First off, looking at the news here on Forex Trading Asia Economic Calendar, we're not on Friday. Scrolling up, Tuesday today, we did have some news being released from the Aussie side, but as we said, you know, I was looking at the pound dollar, but I'll focus on the euro. We do have news to be released for the UK in terms of the employment numbers, but with the focus on the euro dollar, what you should be paying attention to is not all this that is happening tomorrow. It's that US dollar retail sales number. It's the core retail sales number. We're looking at a relatively, possibly a good number. I'm thinking that it's an easy beat. So we haven't seen much movements yet so far, but I'm anticipating a bit more volatility to be coming for the US dollar, especially with the FOMC that Kim Hong has gone through in detail. The next thing to pay attention to, the big item, is not the Euro manufacturing PMI. We're looking at a bit of a downturn. So from moving from 58.4 to a 57.3. Still in the expansionary phase, but manufacturing PMI looking to drop slightly for the Eurozone. But the main thing is the deposit facility rate, interest rates for the Eurozone staying at that minus 0.5%. Rates decision will look most likely no change. And then also with the press conference is missing there. So we'll look at the press conference coming from the Eurozone as well. But I think that everything is most likely going to be overshadowed by the FOMC news release on Thursday morning. So what this means is, looking at the euro dollar here on the H4 time frame, I'm super pleased that the analysis from last week, we were saying that it was going to go up to this point at about 1.1348 and turned down. It did exactly that. It went up to 1.1348, turned down, hit that support. For this week now, it's only moved that 30 odd pips. It hasn't done that much. But what I'm anticipating here is a test of this 1.1254 support again. I think that we are looking at this move for today and tomorrow, possibly moving down slightly, with the anticipation that we're going to see that US dollar strength come into play. I don't think that we're going to see that move down towards 1.1075. I think that's a very big move. That's about 150. I don't think we'll see that big move. What you could be looking for is first a 50 pip take profit, so you can keep your stop loss very tight at about 30 to 50 to 60, the recent low points. And if it does break that level, then you can try for that 1.1075, about 150 pips towards the downside. So first off, 30 pips stop loss, maximum take profit 150, first level decision point about 50 to 60 pips. You're still looking at a 1:2 risk reward ratio on the first cut, and then possibly a 1:5 towards that 1.1075. This is all highly dependent on how the US dollar or the FOMC performs, whether they're going to be announcing as expected, whether they're going to be in line with market expectations. Pay attention, bear in mind that at this area between 1.1254 and 1.1075, if I zoom out to the daily time frame and even the weekly, the last time we got to this level was back in April 2020, right? Was back in April 2020, so it was last year. And also when we broke down from this level was during that peak of the COVID situation in March 2020, we saw that break and shot straight down and back up again. So expect a lot of volatility between or below this 1.1254 all the way down to 1.08. We're going to see a lot of volatility, big spikes up and down. This is on the weekly time frame. So if you went onto the H4 or even the daily, we're going to see all those tails spiking and shadows spiking up and down. So be very careful. Again, the mantra still holds that you want to keep your trades a bit more short term, very well managed in this level. Don't anticipate or don't expect it to move in a straight line towards that 1.1075. I think we're going to see a lot of a zigzag motion if it does come towards that point. But with all that said about the euro dollar, it actually might look a bit more interesting on the euro pound. Expecting that drop in the euro dollar later into the week. Now expecting possibly some movements on the pound dollar on the H4 time frame, possibly towards that 1.3116. I'll tell you more about that tomorrow. What we could be looking at on the euro pound is a further test back up towards that 8590 resistance level, back up towards the 8590, same as what it did last week when it broke above that 8538. What you could be looking for is at about 8548, a 15 to 20 pip stop loss for a good 30 to 40 pip take profit level. You're still looking at a 1:2 risk reward ratio towards that upside, given that we see the pound dollar drop further early into the week. And then once it reacts off this level, I think the euro dollar dragging down later into the week might pull the euro pound back down again off that resistance level. So quite a few shorter term trade opportunities on the euro pound, a little bit more conservative on the stop loss and take profit levels for euro pound, and a bit more explorational, I would say, for the euro dollar for that big 150 pip move towards that 1.1075. With all that, it all depends on the news to be released. It all depends on the FOMC, the BOE, and also the ECB to be released this week. Make sure you pay attention to the news. Check out the club platform. We'll be giving you all the insights and details. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. I'm just about to share those trade ideas, and make sure if you do have time, and I would strongly suggest just re-watching this video as well. The video is shared with timestamps as well, where I'll actually go through and really make sure that we make it as efficient as possible, just depending on if you want to revisit anything that Gim has said or Jin has said as well. So definitely check that out as well. Yeah, it does look like the Aussie has broken 71 as well. So that might have triggered my entry there. So anyway, guys, I'll stop dribbling. Thank you so much for watching. Hope to see everyone in the club as well. Make sure you do sign up and become a member if you haven't already. Bye for now. See everyone tomorrow for the pound analysis.